All right, if you're watching markets right now and you've noticed silver quietly ripping higher, stay with me. Because this just happened, and the real trigger isn't what most headlines are blaming. This isn't Reddit hype, it isn't a random squeeze, and it's definitely not nothing. Just hours after Donald Trump announced a sudden 25% tariff on South Korea, silver started behaving like something snapped underneath the system. And when silver moves like this, it's usually reacting to stress, not excitement. I'm going to walk you through what's happening right now, why this matters more than people think, and how you can recognize this pattern before it shows up on CNBC. If you're watching this now, you're ahead of the curve. Your job is to understand what's happening underneath the price action because that's where the real edge is. Before I explain what caused this move, let me teach you something most people miss about silver. You probably hear it described as a precious metal, lumped in with gold, treated like a shiny hedge people buy when they're scared. But that's only half the story. Silver is also a critical industrial input. It's embedded in electronics, solar panels, medical equipment, vehicles. So when the global trade system gets shaky, silver doesn't just reflect fear, it reflects disruption. Think of it like a bridge between factories and finance. When that bridge starts shaking, silver feels it first. Gold is pure sentiment. Silver is sentiment plus reality. And that dual nature is exactly why it matters right now. When traders see industrial demand patterns shift at the same time, monetary uncertainty rises, they don't wait for confirmation. They position early. If this is making sense so far, drop a comment and let me know where you're watching from because I want to understand who's paying attention to this. Now, here's what's actually happening. When a 25% tariff gets slapped on a major manufacturing partner like South Korea, it doesn't just raise prices at the border. It sends a signal. It tells manufacturers their cost structure is no longer predictable. Autos, pharmaceuticals, heavy manufacturing, all of it suddenly has to be repriced. Companies scramble. Supply chains tense up. Capital gets cautious. And when that happens, investors don't run straight to speculation. They run to assets that sit inside the real economy but outside political promises. That's silver. Let me break down the sequence so you can spot this next time. First, tariffs raise production costs. That's mechanical. It's not opinion, it's arithmetic. Second, those costs ripple through pricing models, earnings forecasts, and investment plans. Companies that were planning expansion suddenly hit pause. Companies with tight margins start looking at layoffs. Third, confidence in global coordination drops. And here's what's wild about this. Silver reacts to both sides at once. It benefits from industrial demand stress and from monetary uncertainty. So when trade policy shifts from cooperation to leverage, silver doesn't hesitate. It reprices fast. Now let me show you what most people are missing. This isn't just about South Korea. This is about a regime shift. When trade policy becomes a tool of pressure instead of partnership, markets start pricing instability, not growth. That's when silver stops behaving like a commodity and starts behaving like a warning light. And when you see silver accelerating while equity narratives stay calm, that divergence should make you nervous because one of them is wrong. Either silver is overreacting to noise or equities are underreacting to risk. And historically, when that gap opens up, it's not silver that's wrong. But here's the part that should really make you pay attention. The companies most exposed to South Korean manufacturing aren't small players. We're talking about supply chains that feed into Apple, into Tesla, into major pharmaceutical operations. These aren't isolated disruptions, they're systemic vulnerabilities. And silver isn't waiting for the earnings calls to confirm the damage, it's pricing the probability now. That's what makes this move different from typical commodity volatility. This isn't speculation on future demand, this is real-time repricing of present risk. And there's a secondary layer most people aren't talking about. South Korea isn't just a manufacturing hub. It's a critical node in semiconductor production, in battery technology, in advanced materials. So when you hit South Korea with a 25% tariff, you're not just affecting today's trade flows. You're affecting tomorrow's innovation pipelines. Companies that were planning multi-year investments in green energy, in electric vehicles, in next-generation tech, they're now running new scenarios. They're asking whether they can trust the policy environment. And when that trust erodes, capital doesn't just slow down, it repositions. It moves into assets that don't require political stability to hold value. assets like silver. Now let me zoom out and show you why this pattern matters. This is the exact same playbook we've seen before. Go back to the late 1970s when trade friction and inflation anxiety collided. Silver didn't creep higher, it exploded. In 1979 alone, silver went from around $8 to over $50. That wasn't because of fundamentals changing overnight, it was because the underlying structure of confidence broke. Look at 2010 to 2011 coming out of the financial crisis, when confidence in monetary coordination was fragile. Silver didn't wait for confirmation, it front ran the fear. It went from $17 to nearly $50 in less than a year. Even in 2020, when supply chains froze and policy responses were improvised, silver snapped higher before most people understood why. It went from $12 to nearly $30 in 5 months. When you zoom out, the pattern is clear. Silver doesn't lead because it's trendy, it leads because it sits at the fault line. It's the asset that connects industrial reality with financial anxiety. And every time those two forces converge, silver moves first. The question isn't whether silver will react to trade disruption. The question is how far it'll go before the broader market catches up. Now let me be skeptical for a moment because I want you to hear independent thinking, not just hype. Could this be overblown? Sure. Could traders be front-running a headline and fading it later? Absolutely. Markets overshoot. They always do. And no, this doesn't mean silver goes in a straight line to $135 without volatility. That's not how markets work. Could this tariff get walked back in a week? Maybe. Could South Korea negotiate exemptions? Possibly. But here's the thing. It doesn't actually matter whether Trump's motive was strategic negotiation or genuine policy shift. The mechanics are what matter. The signal has been sent, the uncertainty has been introduced, and you can't unring that bell. Even if the tariff gets reduced, companies now know that trade policy is a variable, not a constant. That changes planning horizons. That changes risk assessments. Focus on what you can verify, not what pundits are speculating about motives. There are probably 3 types of people watching this right now. If you're already positioned in silver, you're probably feeling validated but uneasy. You're watching the price tick higher, and you're wondering whether to take profits or let it run. My advice to you is simple. Don't anchor to a number, anchor to conditions. If trade tension escalates and monetary credibility weakens, the thesis stays intact. If not, reassess. Your job isn't to predict the top. Your job is to stay aligned with the structure. And right now, the structure is supporting higher prices. But watch how silver behaves on pullbacks. If it gets bought aggressively on dips, that tells you demand is real and not just momentum chasing. If you're on the sidelines, skeptical, thinking this feels crowded or premature, that's fair. Your edge is patience. You don't need to chase. But don't ignore the signal either. Watch how silver behaves over the next few sessions. Does it hold gains? Does it build a base? Does it show resilience when equities pull back? Those are the tells. And if you see confirmation, you'll have better entry points than the people who jumped in on day one. There's no shame in waiting for clarity. Just make sure you're actually watching, not just dismissing it because it didn't fit your timeline. And if you're new, just trying to understand why this matters, focus on the lesson, not the trade. Learn how tariffs, confidence, and dual-use assets interact. Understand that markets don't move on news, they move on changes in structure. This is how you build pattern recognition. This is how you get ahead of narratives instead of chasing them. That knowledge compounds. So here's what I want you to answer in the comments. What part of this analysis surprised you most? Was it the dual nature of silver? Was it the historical precedent? Let me know because that tells me what to focus on next. Here's where I stand. I'm not pounding the table, screaming all in, and I'm not ignoring this either. I'm watching 3 things closely. First, I'm watching whether additional tariffs or retaliatory measures follow. If this becomes a pattern, not an isolated event, that changes the game. If South Korea responds with countermeasures, or if other countries get hit with similar tariffs, that's escalation. And escalation validates the silver thesis. Second, I'm watching how industrial indicators respond, especially in manufacturing and autos. If we start seeing production slowdowns or order cancellations, that confirms the supply chain stress is real. Third, I'm monitoring whether silver continues to outperform risk assets during calm equity sessions. If silver is rising while stocks are flat or slightly positive, That's telling you something. It's telling you there's a fear bid underneath the surface that hasn't fully expressed itself yet. Based on my analysis, this tariff move wasn't random, it was mechanical. The fundamentals didn't change overnight, they revealed themselves. And if history rhymes, silver isn't rising because people are excited. It's rising because something underneath the system is cracking. The fundamental picture for silver already included industrial demand strength and monetary uncertainty. What changed is as the catalyst became visible. What was theoretical became actual. And when that happens, repricing accelerates. Now, I'm not a financial advisor. This is not financial advice. Do your own research. Verify everything I've said. Check the data yourself. Look at the tariff announcement. Look at silver's price action. Look at the historical patterns. Don't take my word for it. But if you're serious about understanding markets, this is the type of analysis that matters. This is how you learn to read between the headlines. If you made it this far, you're the type of person who doesn't just react to price movements, you try to understand them. That mentality will serve you well. Most people wait for confirmation from cable news before they start paying attention. You're here now, asking questions, looking for patterns. That's the edge. So if this breakdown helped you see something you missed before, hit that subscribe button and share this with someone who's trying to level up their market understanding. We're building a community of people who think critically about what's actually moving markets, not just what's trending on Twitter. Stay sharp out there. Think critically, verify the data, and make your own decisions.